Welcome to the Scholars Learning Classes. In this video, we will be studying about the various other aspects regarding the partner's loan account, partner's capital account, cash or bank account, right? All four. I told you in the starting, while starting of this chapter, that we make four accounts: realization account, partner's capital account, partner's loan account, and then cash or bank account. So see, partner's loan account, if a partner has given any loan to the firm, his loan will be paid off after paying all the outside liabilities. When all the outsider liabilities are paid in full, then only the turn comes to pay back the partner's loan account. So partner's loan account is not transferred to the realization account, and in fact his loan account is being prepared separately and it is paid off by passing the entry of partner's loan account debit to cash or bank account. Now, after paying all the outside liabilities, if something is left, then we will pay the partner's loan and we won't pay it in the realization account. Make this in your mind very clear. We open a separate account, we make a separate account, that is partner's loan account. Now see, after the transfer of profit and losses on realization, undistributed profit, reserves, etc. are transferred to the partner's capital accounts. The balance of capital accounts are closed in these two ways. Number one, when a partner is required to bring in cash to clear off his debit balance. So in that case, if there is a debit balance that is arising in the partner's capital account, he has to bring in the cash. So cash is coming in the firm, so cash or bank account debit to partner's capital account. Right. Now, when a partner is paid, if there is credit balance in partner is paid credit balance of his account, so in that case he is being paid. So partners, when we pay, cash goes out, so to cash or bank. So what will be debited? Partner's capital account debit to cash or bank account. Then comes cash or bank account. See, all the payments that you make are recorded on the credit side. All the receipts in which cash has been received are recorded on the debit side of cash and bank account balance. It is prepared at last, and at last debit balance of cash or bank account should be equal to credit balance of cash or bank account, and this also helps in checking of accuracy, that whether you have done the question right or wrong. Right. So in this way, this account also helps in the verification of the arithmetical accuracy of this account. And if cash balance and bank balance both are given in the balance sheet, only one account, either a cash account or bank account, is prepared. Right. If cash account is prepared, an entry is passed for withdrawing the bank balance and then bringing it in cash. And if bank account is being prepared, then it is assumed that the cash is being deposited into the bank. So if both cash and bank balance is given, in that case only one account will be prepared, that you decide. Either you are preparing bank account or cash account. If you are preparing cash account, then withdraw all the money from the bank, you'll have cash in your hand. And if you are preparing bank account, whatever cash is there, deposit all the money into the bank so that you have only bank account with you. I hope you have understood this. If there is any doubt, any question, do write me in the comment box. Please download our Scholars Learning app and enjoy the learning experience with us.